This is Golden Rule Radio, a weekly summation of the precious metals markets, the news that moves those markets, and what's on the horizon next week. Today is March 22nd, and we're going to let Robert just jump right in.
I'd like to open today's show with a little bit of background that has led our company to where it is today. Don McAlvany, the founder of our company, was the national marketing director of the largest gold share investment company in the world in the 1970s. He took trips with investors down to South Africa, and at the time, South Africa was the largest producer of gold, and today it's the second behind China. Their gold production, South Africa's, peaked around 1,000 metric tons of gold per year in about 1970. And today, it is the second largest producer, and it produces just under 200 metric tons. And so China, being the largest producer and consumer of gold, makes sense from what we said a few weeks ago on the show about the price movements of gold occurring in the Asian markets and not the U.S. market. That's one thing about demand that I think is just lacking in the U.S. market. So I feel like we have somewhat of a perfect storm with the gold supply-demand fundamentals, because you have supply diminishing. Meanwhile, you have geopolitical risks that we haven't seen in decades, as well as Trumpflation and many other things, which should put demand up.
Well, and you also mentioned that the production of gold has declined over the last 10 years.
Right, and the old adage, all the gold mined and put into a functional form, it would fit into 2 Olympic-sized swimming pools. There'd be 1.5 ounces for every citizen. If you owned 30 ounces personally, you'd be in the top 1% of gold holders in the world. So all of that, to your point, Robert, pressure from a supply and demand standpoint, we haven't really even seen anything yet.
Back to the background with Don, just briefly, he started our company in 1972 through an exemption of religious medallions of gold being actually legal, while gold bullion was not legal until there was some legislation that he helped get moving to get gold legalized in 1975. He was a founding member of Industry Council on Tangible Assets, ICTA. Our company is ICA. And then he helped pioneer the allowance of precious metals in IRAs in 1986. He could keep going with that. But back to supply and demand, you have a big decline in gold production at the world's top 10 mining companies. Primary global gold output declined in 2016. And I think about 10 years ago, the World Gold Council had listed 2016 as peak gold. They went on to say that the next few decades would see a decline in production of gold. So you have a steady decline in production of gold. Meanwhile, you have demand in Asia and soon to be demand in the United States. I can almost guarantee that is going to rise. So that means what? What does price happen?
Well, and that's something we didn't see during the last gold rise, is we didn't have a lot of the physical limitations on the precious metals market. We had the market limitations, futures, options, contracts, things like that, derivatives off of those. But the actual physical limitations on the physical metal getting drawn out of the earth is something we have to deal with in our industry that other markets don't.
So let's get right into gold here. You know, strong 6 straight days of price increases. A strong movement off of 1,200 miles.
Yeah, we bounced right off that 1,200 mark we talked about over the last couple of weeks on the correction. We did have, obviously, a little bit of help from Yellen that we spoke on last week. So we're just scraping 1,250 today. I would argue that if gold moves and holds above the previous high at 1,264, 1,300 is almost a definite at this point.
I agree. I think that 1,264 marker with you providing that on a technical chart is going to be your high side. We need to break through that. With the 6 straight up days, it wouldn't surprise me to see a little bit of cooling off before we try to shoot for that number and break through it. You know, you have to talk about the downside too. You could see 1180, roughly 1,200 in that range being the lower side of a pullback. But that 1264 marker, once it's broken, we're off to the races up to 1,300.
And let's not get spoiled. I mean, gold's still up 8.4% on the year to that 1248.20 mark, and all eyes in that regard on the precious metals movements because they are outperforming so many other sectors. Silver, again, up almost $1 or 5.6% since the Yellen spike. in the rates last week. Technical guru Miles, what are you seeing?
Taking a quick step out too, because we are talking about the metals on a weekly basis. So when I zoom the charts out a little bit, and we'll put these up on the board, we've been talking a lot about the ABCD Elliott wave theory for the last few weeks. And we've been talking about that in the short term. Well, what about the longer term? We can, I think, argue going back to the start of the rise back in December 2015. We had a pretty good jump up from the 1248 lows. If that was our true A wave, and if we just finished our B wave with the Yellen announcement last week arguing that that was the next bottom, we showed those 3 bottoms on the 3 Fed rate increases. If that was our bottom, then we've actually just started our C wave, and that C wave is going to take us well into the 1500s.
And we'll know if we cross that 1375 threshold, right? That'll be a good upside resistance point to break through.
Yeah, and the silver you mentioned, we're going to see a very similar pattern there because silver showed us a similar pattern coming back over the last 8-10 years. So silver in the mid 24s.
So back to silver then, still up 10% on the year to 1755, and actually it's given up a little bit of its gains, but that's only increased the gold-silver ratio to 71-1, all the more emphasis on silver.
Yeah, all the metals have had a great move over the last week. I think silver's due a quick respite down to somewhere in the 1710 to 1725 range. I said last week, buy as much as you can under 18. If we get closer to 17 again, I'll be backing up the truck.
Platinum did push briefly below 950, like Tori said last week. We're back above it, and it's up 3.6% from the bottom last week. Platinum needed a deep correction and got it. Weakest of the strong at 6.6% on the year to 964. We've been recommending platinum for weeks now, and if you've been on the fence, now's the time. I think Tori on palladium mentioned 743, and if you look at the chart, it went right there.
Well, and the palladium is the strongest of the strong. If platinum's the weakest of the strong, they're all doing well, but palladium up 15.7% this year. And I give it a high probability of breaking through this time. If we do break above 800, the next resistance is at 825.
Yeah, from the standpoint of a guy who enjoys the technicals on a chart, I got to tell you, I keep bragging about the palladium chart, but you could teach a class on the last 18 months of palladium. There is so much in there that's taken place.
And let's look at gold and other currencies. I mean, it's telling you, listener, everything you need to know. Really, the question is, what are you waiting for? The ruble, it's up 1.8%. The yen, the euro, the pound, the Swiss franc, the Chinese yuan. The price of gold is up in every one of those currencies significantly in 2017. And that, to me, is a huge barometer.
While we're on currencies, we'll mention the dollar index is now below 100. It did run into resistance at 102 and pulled back below 100. I think 99.5.
Winner.
Not yet, I don't think. I think it's still stuck in a range. I think 99.5 is where the previous low was. So you're still kind of in a range, maybe breaking below that.
Everybody's looking at me right now and laughing at my 104, so I guess I can be wrong occasionally.
It's the euro as well. The euro has been strong, and a lot of this that we've just talked about this whole show has been just the reaction this week from the Fed last week.
Yeah. No, and not wrong, Miles, by any means. We were in the center of a range, and I had a 50-50 chance, so...
If we do break below those levels Robert was talking about, we could see the dollar push down as low as 96.5, which would be a pretty huge drop in the dollar and I think get a lot of attention.
And a lot of impact on the gold price.
Yeah, push it up.
So in regards to the U.S. equities, Dow Industrial posted its biggest decline yesterday in 2017, off 1.6% from the high. The S&P at 2348, a close below 2309 should trigger a sell.
Central bank-wise, inflation remains a stated concern of the Fed. I mean, obviously with the rate hike last week, and many analysts agree, but the government bond prices really have been moving counter to those outlooks, and that's confusing to me. Yields have fallen, bond prices have climbed since the rate hike last week. And then you have the news of the UK having their February numbers come in at the highest level since 2013, climbing to 2.3%, and that was 0.2 higher than expected. So nothing has changed in terms of the inflationary outlook. Ignore the bond market. Look at gold. Geopolitically, a lot of comments flying around. North Korea responds by saying, look, we'll just accelerate our nuclear weapons development, and we will nuke the United States if they act in proactive fashion with any sort of military action. So I don't know, you got that, you got Russian interference news with our elections. Give me a break. Same news for 50 years, and they're thinking the American public's going to bite.
Recommendations, what you guys got?
Gold's about $15 away from breaking a significant ceiling, so if it breaks that, you better be in.
Yeah, if you've got the ability to be adding to ounces, again, what are you waiting for here? Now's the time. And if you're not overly exposed already to silver, that may be the best play for you. So give us a call and we'll let you know, based on an analysis of your portfolio, what exact metal, which exact product within that metal category is best for you.
Don't let emotion dictate your investment habits. Let logic, charts, reason, global news, let reality dictate your investment decisions, not your emotions.
Yes, look at the global prices in terms of gold. Keep your eye on that. Try to avoid the rest of the noise out there in the world. So on behalf of Robert and Miles, this is Tori signing off of Golden Rule Radio. Thanks again for joining us. Please subscribe to us by clicking the subscribe button below. You can also follow us on Twitter at ICA Gold. Call us at 1-800-525-9556 and spend some individual time running through a portfolio analysis with one of the advisors.
Thanks for listening.
We'll see you next week.